All right, welcome to this class tonight. We want to look at how to use daily candle for entry. First, we want to know the characteristics of a candle, any candle, whether it's a 1 minute candle, whether it's a daily candle, 5 minutes candle, they have the same characteristics. A candle will have the open, it will have the low, the close, the high. And that depends on what candle it is. So if it's bullish, it's going to have open, it will have to create the low first, create the high, and then close. Like what you can see, it will create, once it opens from here, it will create the low first. If the candle is bullish, then it will create the high, which will be the wick before it will close. But if it is bearish, when the candle opens here, it will create the high first, come and create the low, then close here. That's the characteristics of any candle. It has these 4 characteristics: open, the close, the low, and the high. So I'll take you to the chart, and then let me see if I can make some inscription so that it will be easier for us to flow. So for those just hopping on, welcome. Those just hopping on, you're welcome. Okay, so this is a candle. Let me start with a bullish candle. This is a bullish candle. So since this is a bullish candle, first, this is the open of the candle. Price will first, when price opens, since it's bullish, the first thing a bullish candle will do is to create the low. To create the low. After creating the low, the next thing it will do is to create the high. And then the fourth thing it will do is to create the close. So I'll call this open is 1. That's the first thing it will do. Then the low is 2. And then the high is 3. This is the order in which price creates this thing, and close is 4. So open, I think when you put it here, it will create the low, it will go and create the high, then it will close. This is for a bullish candle. So if the candle is going to be bullish, this is what you're going to find. A bullish candle, this is the characteristics. This is what will always happen. Like always. This is what will always happen for a bullish candle. Why a bearish candle? Okay. All right, let's use this for a bearish candle. Or let me just make it black. Really don't like this. Whichever. Let's use this. This is a bearish candle. For a bearish candle, this is what we have. This is the open for a bearish candle. That's the open. Then price will first of all create the high. Price will create the high first. Then price will come and create the low. And then price will close. This is for a bearish candle. So what it then means is that this is the formation the candle will always take. Bullish, bearish, whichever one. It has the same characteristics all the time. Okay? So like I did, open is 1. This is 12. Open is 1. The high is 2. Your low is 3. And then the close is 4. I have to label this so that it will be easier for us to comprehend. Now, why does the candle go in this formation? It's very simple. So if we are going to be bullish, by 12 o'clock midnight, the candle has closed. 12 a.m., a new candle opens. So if it opens, if it makes its first move below, just know it's going to be bullish. It opens and it first of all moves below, it's going to be bullish. So that you can get in. Remember, we buy at the lows. We buy at the lows. That's where we buy. We buy at the lows. Okay, so price gives you that space to get in on the trade. So it creates the low. You are expected to enter at this low. And then price goes to the high, creates the high of the day, where possibly you should take profit and then come to close. So if it's bearish, we are going to have a bearish day. Price will first of all open and create the high so that those that want to sell can get in on the sell, and then we come down to take profit at the lows and close. This is the formation that price will always give. Now, how do we use this to spot our entry? How do we use this to join a trend? How do we use this to catch an entry? That's what I want to focus on tonight. You can go to maybe just go to Google and look at formation of a candlestick pattern and all of that. Forex Factory has all of this explanation, baby pips and all these materials. There are a lot of materials on the net that talks about high, close, open, low, and all of that. So you can refer to them for other information. But what I want to talk about is how to use daily candle to spot your entry. That's what I'm concerned about. How to use daily candle to spot entry. So let's go to the chart. Let me show you one or two things. Let's go to the chart. All right, this is VIX 25. I'm going to start from where price is. Where price is. This is where price is currently. So let's consider this candle first. Consider this candle, consider this candle, consider this candle. That will be enough examples. This candle was bullish. So what it means is that price started from here, open, price went down, created the low, price went up, created the high, and price closed there. So if you are going to look for your entry, when this candle closed, this candle, as this candle closed, is bullish. So the first thing to do is to mark the closing price, closing price, closing price, the close of the previous day candle. This is this candle. I'm considering this candle. This candle. Do I need to? Okay, let me just, all right. This is the candle I'm considering now. So I'll put this at the close. This is the close of the candle. Because where the previous candle closed, that's where the new candle is going to start from. So this candle, for instance, was bullish. Price closed here. That is where the new candle is going to start from. Price closed here. So the new candle opened here. This candle is bullish. Price closed at the high. The new candle started from there. This candle is bearish. This candle is bearish. Price closed here. The new candle started from here. This candle is bearish. Price closed here. The new candle actually started from here. Traded this way with speed, came back to this place like a retracement, and then closed there. So where the closing price is, that's what I'm concerned about. The closing price of the candle. So you must be able to know what the closing price of that candle is. So let's go back to this candle. This is the closing price of this candle. And since it is bullish, you know that the next candle, if the next candle is going to be bullish, then it means that you have to trade below. If you have to trade below before you trade upwards. Because for a bullish candle, it will trade to number 2 before going to number 3. So this candle is supposed to trade below. Forgetting that we are at a higher time frame point of interest now where we are selling like a retracement. Yeah. But I'm just looking at this daily candle, assuming I don't know structure. I don't know anything about the Forex market. I want to look at how to use daily candle to spot entry. This candle, I want to look for below the closing price. It was bullish. Oh, sorry, it was bullish. This is the open. Is the closing price I want to talk about, please. Is the closing price. Let me write on it. Just spot the closing price. Closing price. Spot the closing price. It's closing price I want to talk about. So this is the closing price. I would love to make that big. Or let me change the color to red. Yeah, maybe. I just want the candle to be different so that I can easily spot it. Okay. All right, something like this. So this is the closing price. This candle was bullish. Open was here. Low was created. High was created. It closed here. Then you go to a lower time frame. above this opening price, above the opening price, you want to look for sell. Below opening price, you want to look for a buy. So when this price opened, first it traded upward. Since it traded upward, we are supposed to look for a sell on this candle on a 5 minutes. So let me see if we can get 5 minutes on this sell. Assuming this candle is supposed to be bullish, we're supposed to be looking for a buy entry below the closing price. Below the closing price. Okay, that was the candle. This was it. This was the candle. Okay, this was the candle. Now, price closed here. A bullish candle moved up and closed here. So you'd have been able to get an entry from here to sell below an entry. And if you understand structure, you will see that this gave you a formation. This gave you a model formation. This was a break of structure to the downside. So this sell would have been valid. But price came weak out this. Okay, you'd have been looking at, all right, maybe let's play this last candle for entry. And then price came and took you out. That's fine. You will not always get that entry, but that's fine. But this would have been your entry. Let's go back to daily for a sell. Let's consider the next candle. Let's consider the next candle. All right, we missed that entry. We didn't get that sell. That's fine. That's fine. Now this is the next candle. The next candle became bearish. So for a bearish candle, it opens at the top, trade high, close below. So below was the close. So closing price is what you are looking at. This is the closing price. Close below. So anything above the closing price we want to sell, since this candle is bearish. If price comes above closing price, we want to sell above closing price. We want to sell above closing price. So let's go to 5 minutes and see if there was a model or a sell formation that would have used to get in on this trade. Let's see. Okay, this was it. Any formation above this price, we can get in on the sell. Okay, formation was there above. Let's see if we can spot that formation. This was the formation above opening price, above closing price rather. You see that formation structure. That's why I take time to always teach structure. Look at the structure. A high, a low, higher high. Price came, broke structure the first time. Price came and retested, it didn't go, swept liquidity. And from here, if you understand structure, price has changed direction. We were having a low after this high. We had a higher high. We had a higher low. We had a higher high. We had a lower low. Break of structure. When price gave you that break of structure, the next thing price did was that price came and created a higher low. Did the body candle close? No. All right, let's candle close above. I want us to be accurate, please. Let me zoom it out. Let's look at the candle. We use body. So let me put this here and let's see whether the candle closed above this. All right, the body of the candle closed above. So this was a higher high. This was a higher high. So price gave you another higher high after this low. Higher low, higher high. And market started changing after this sweep of liquidity. Price started giving you, look at the formation. Formation has changed. Higher high, a low, a lower high, and the next thing price gave us a lower low. price started changing formation. Price started changing formation. So when price started changing formation, you want to look for your next entry. Okay, do I have imbalance around? Do I have any smart money play? This was that candle that pushed price out. This was the candle that took the buy side liquidity. That was the candle. So that's the candle you'd have waited for. So if you had waited on this candle, you'd have gotten entry. That was the candle. And below that candle, you have your imbalance. You can see that imbalance there. This week was cleared and price gave you, so this is a lower high, and then lower low, lower high. And you'd have been able to get entry on this. This is 5 minutes. What could you possibly risk? What could you possibly lose? If you play this imbalance, get entry here, stop loss on this high. You'd have gotten at least a 1 to 3. You must get a 1 to 3 from this formation. Let's check the next candle. So we go to daily. Let's go back to daily. Let's look at the next candle. Okay, next candle. So that was the candle. This candle is bearish. So this was the closing price of the next candle. So anything above closing price, we want to sell since this candle is bearish. Anything above closing price. So let's go to 5 minutes. Let's check this next candle. So let's put this together. Let's see. All right. If we have any formation, any break and retest around that zone, so long it is above closing price, you will see the formation. If you see it, it's fine. Then you can start looking for, okay, above closing price. This was when price came back to closing price. This was when price came back to closing price. Price closed around there, and we need to create the high before we go down. So what can you find? Price gave this high, this low, a higher high. Price closed below. And to tell you that we must come to that above, price came back to the above, coming into this imbalance. So if smart traders would have played the open of the imbalance, that's the open of the imbalance. Let me zoom it out. I don't want to be as if I'm just creating this. This is the imbalance. All of this is the imbalance. From this place down to this week. That was the week. That was the last week that was created. That was the imbalance. So if you had played open of the imbalance, it would have been on the trade. Only 6 pips stop loss that have been on this trade. You will be sure of getting a 1 to 3. Even if you don't know the higher time frame structure, you will still be sure of getting a 1 to 3. 1 to 3, and then you are off the charts. You are off the chart. That's a 1 to 3. I don't want to talk about how price fell. Let's remove this. Let's go to the next candle. We go to the next candle. I'll keep showing you this over and over again. Let's go to the next candle. So that's open. That opening candle. This was the last candle we looked at. Let's look at this. So this candle closed here. The bullish candle, this bullish candle opens here. I don't know whether the candle is going to be bullish. I cannot tell. All right. So it's really not my concern. What's my concern is this candle was bearish and it closed at this zone. So since it closed at this zone, I want to sell above closing price. So I want to look for above closing price, any formation above closing price, and then I want to sell from there. So I go to my 5 minutes. Let's see whether I'll get a formation above closing price. Above closing price. Okay, above closing price. Let's see. We're not considering this place. This is the last candle we are currently. This was the first above closing price. Or let me do something like this. 1 minute, please. Let me do something like this. Let me cover this candle. Yeah. Look how we let it. I would really love to exempt. I want to exempt this other candle so that we have. Which can have. Okay, let me see. Sorry, just bear with me. I want to see if I can move it. Can't I move this thing? Oh, it can't enter here. Wow. Okay. All right, let me use this then. That's what I want. I want to just cycle this candle. Like, what's going on? Does it mean I can't cycle it?
Try using the eclipse too.
What?
Eclipse.
Okay. Can I find that? Let me see. Okay, maybe something like this. Yeah. Let's just manage that. But I really want to have this. Okay, let me use this. All right, so let's go to 5 minutes. Let's see anything above this opening price. Above this closing price, rather. 5 minutes. Anything above closing price. Let's see whether I'll get that model formation above the closing price. Okay. I think it's clear now. This side is not there. This is what you are looking at. This side is the new candle. So let's focus on this side. This is where it is. All right. You can see it now. Clear. What can you find above the closing price? Price gave all of this chubbiness. Price created the high, and price gave you that break of structure. You always see that move. If you keep an eye on it, you will see when price give you that break of structure, where did price come to? There was an imbalance in this last candle. That would have been your entry. Yeah, that was the imbalance. That would have been your entry. You are definitely going to get a 1 to 3. I play open of the imbalance. I don't play the close or 50%. This is 5 minutes. What possibly would you have been losing? 4 pips. Yeah, something like that. So you want to get a 1 to 3 first. I can remove this now. I've gotten a 1 to 3 first. 1 to 3 around this place. Yeah, 1 to 3 around this place. Okay, let's just leave that. I've gotten a 1 to 3. Let's go back to daily. Let's check the next candle. Go back to daily. All right. Next candle. So that's how you'd have gotten this entry. See the entry is on the candle. Now this candle closed bullish. Okay. And we're looking at its closing price we are concerned about. So this is the closing price. So anything above this closing price, we're supposed to sell. But since this candle is bullish, we look for closing price. Anything below closing price, we should be looking to buy there. Since the candle is bullish, we don't want to look at below. The candle is bullish, telling us that we are going to be bullish. So anything below, we should look for a buy. Below the closing price, we look for buy. 5 minutes. Let's see if we got that formation below that closing price. That formation below closing price. Okay. So below closing price, Did you get any formation? Any bullish formation? Let's see. This is all below closing price. You can see that was below closing price. This is happening below closing price. Below closing price. This last candle, there's an imbalance here. So I'll be looking to buy this. What's going on? I'll be looking to buy this. There's imbalance here. Yeah, we should have just played. So if I had my entry on this imbalance, let's say I play the open of this imbalance. What's my stop loss pips? 5 pips. How much is that? Just 5 pips. Then first I want to look for a 1, 2, 3. A 1, 2, 3, a 1, 2, 3, a 1, 2, 3. Yeah, this will give me 1, 2, 3 around here. Okay, I got it. So this is how we use daily candle to spot entry. We want to wait for that candle to close. And then once the candle closes, at that 12 a.m., just mark out that candle. Mark out the close or the open of the candle. Then you want to wait for price to give you that formation, either above closing price or below closing price. If it's bullish, you should know that we are going to open here. Look at the closing price. Anything above is for a sell. Since we are bullish, anything below the closing price, just look for a buy formation. So if another candle is going to form here, price has closed here. Price will first of all come down. Another bullish candle is going to form. It will have to come and create the low. And then it will go up to create the high. Come back and then close. If another candle will be formed here. So anything below this closing price, look for a buy if the candle closed bullish. And if it closed bearish, then anything above, you want to look for a sell. So closing price, any other candle will come here. Price will give you that formation around here. First, it will come inside, create the low, come and create the high. Then it will now close. It will close. After creating the high, it will come back and then it will close. Yeah, just something like this. That's what will happen. Yes, does someone need to be on the chart immediately? No. Just mark out the open, the close, especially the close of the daily candle. Just mark it out. And anytime the formation, this is synthetic. It's not affected by time and price. So mark out that daily candle. First, the close of the candle. Mark out the close of the candle. Now, this candle is bullish. So mark out the close of the candle. Once you get the close of the candle, you know that price will come inside. Since we are bullish, price will want to continue that bullish move. Mark it out. Any evidence of accumulation there to go up, just take it. On 5 minutes, you can catch the beginning. You will catch the wick of this candle. Yes, you will catch the wick of this candle. Yeah, go ahead. You can speak. You can speak.
Okay, thank you very much. Good evening, Mr. Moses.
Please, sorry, synthetic opens 1 a.m., please. Synthetic opens 1 a.m. The new candle opens 1 a.m. So once that last day candle closes by 12, just mark it out and expect any distribution or accumulation around that zone. Then you can go ahead and look for entry. Go ahead, sir.
Yeah, Mr. Moses, good evening.
Good evening, sir.
Thank you for the perspective shared so far. Mine is just really a clarification because from this perspective you shared now, that means when a daily candle closes and you mark out the close or the open of that candle,
Just the
depending
close
on
of the candle, please. Just the
yeah,
close of the
okay,
candle,
sorry.
whether bullish or
Yeah,
bearish.
sorry. The close of the candle. For instance, you mark it out by 1 a.m. when a new candle begins to form. That means you have to be on your chart pending when there is a formation for whichever direction you want to take for that particular day. I don't know if you get my point.
Yes, sir, I get it. And that's just it.
Mhm.
Because this is, like I said, this is synthetic. Synthetic is not okay, this is when the price moves. Synthetic is constantly moving. So you can
Yeah,
just mark it out, check it. If it forms, it can form by 5, it can form by 2. If I go to all this formation and I want to check the time, you will discover that it took some time. Let's see. Let's see. Let's see. When is this candle forming now? This is forming around 18, 19, 20. This formation is forming around 18, 19, 20. And this candle closed around 12, 1 a.m., 12 midnight. Now, this high was created. There's no formation to buy. So you just don't want to buy. And if you play it in line with structure, we are still bearish. So you shouldn't be looking for a buy entry now. But now that on 5 minutes, price has given you this formation, it has broken this high. I think it broke this high too. Okay, it didn't break this high, but price has broken this high. There's an imbalance there. So if you are playing this imbalance, will be on this trade, awaiting it to move to this zone. Now, it's not rocket science. Not that price will give you that entry all the time. But if you play this perspective, 3 trades, I'm sure you can get to. Yeah, I've backtested it before I come to share it. You will get to. If you play it 5 trades, I'm sure you should get like 3 trades that will move in your direction. So a matter of being in the chart, it now talks about how you treat your business. Trading is an investment, trading is business. So it's not something that you're supposed to trade part-time. If you're doing it part-time, fine, find a way around it. And that's why knowledge is very important. Once you have the knowledge, you just come, open your MT5, all right, price has not given that model yet, still below the opening price or above the opening price, depending on the direction or the previous day candle, daily candle rather. Then you just want to keep checking until you get that formation to get entry. But why are we teaching this? We don't want you to just open the chart. Oh, this candle is bullish, you jump in. Open the chart. This candle is bearish, you jump in. We don't trade like that. We must wait for a model. There should be a formation that informs our trading. That's why we're sharing all these things. Let me take one more question before I'll stop the recording, and then because I'll be uploading it to the YouTube channel later, then we can have some time for questions before we call it tonight. Just one more question, please. One more question, please. Yeah, I want to believe that we understood it. I want to believe that. So yeah, I want to believe that we understood it. So I'm going to stop the recording, give you time to ask questions. Is that okay? All right, thank you guys for hopping on the call. We'll have question and answer time right now. Cheers, fams.